Hey guys, this is Market Update. This is actually really, really important. We've broken out already. This looks to be it. This looks to be the next move to the next all-time high. This is on the monthly chart. This is the clearest price action you could ever hope for. Okay, we've already broken out. And of course, the mainstream kind of attention isn't going to come back until Bitcoin's probably 75, 80,000 when you break this kind of previous print right here. But this price action is just insane. Okay, so we have the previous all-time high monthly close candles. We break through that. We come back to test with a sell-off, and we've already broken out this level right here, 61,000, right? The previous all-time high monthly closes. We're done. We've already broken out of it. Okay, so this is it. Now, you may say, well, are we going to come back and test this and then move? I don't think so. Let's go through everything, right? There is a pro-crypto candidate who is essentially massively odds on to win the election, right? So we can assume that he's going to win the election. He's running on a pro-crypto, pro-Bitcoin ticket. This is just literally everything you could hope for pretty much if you're specifically looking at crypto prices, right? Now, no matter who wins, it doesn't matter because the fiscal situation in the US is going to continue in the way it has, and that pushes asset prices higher because the currency is debasing itself and there's stimulus in the economy. None of that matters right now. The Bitcoin price is trading the election and the pro-crypto candidate is winning. We are pricing it in now. We've already broken out. So it's going to get volatile. Sure, you're going to get big moves up, some sell-offs. We're already seeing that on the dailies, right? These kind of Burj Khalifas. But it doesn't matter. Look on the monthly. We have already broken out of this range. So this potentially is the next move to the next all-time high and the next consolidation. This is a big move. I actually think that when we break out here, this is that part of the bull market, right? Where things get crazy. Ultimately, that's the end of the bull market as well. So we actually have to start thinking about where prices can get to, right, during this bull market. And if you're looking to take profits at the mature end of the bull market, you have to start thinking about that. But this is the breakout and things are looking exciting. If you do trade crypto, check down below to the Bybit link. You can get up to $30,000 as a deposit bonus on there. If you're new, just click the link to find out the details. Speculation is coming back into the market. Volume is picking up. This is exactly what we want to see. So the ETF inflows are insane. Now, this isn't just buyers. What's happening here, if you look at all the data, is open interest is starting to increase. Open interest is just the amount of trades, the amount of volume and nominal dollars, that people are trying to actually place on this market, right? Now, for every buyer, there is a seller, right? But you have essentially people coming in now saying, I'm buying Bitcoin because I am sure of the election and I'm making my bets that Bitcoin actually does well in that scenario. Now, the ETFs have huge inflows. This is not just buying. There are buyers coming in. For every buy, there's a sell. There is also a lot of increased volume and open interest in futures and derivatives markets. Now, what a lot of hedge funds do, right, and their remit as a hedge fund is to essentially just arbitrage yield out of the market. One of the ways they can do that is to arbitrage differences in prices and volumes between derivatives markets and spot markets. That's what's happening here. So a lot of this volume isn't just people pouring in. A lot of this is hedge funds who are actually net neutral. So they're long somewhere and they're short somewhere else. Because they can trade these ETFs easily, what they're doing is piling in long spots on these ETFs, and then they're trading the other side in the derivatives markets, either in futures or in perpetuals, to essentially hedge out their delta. So they're delta neutral, right? So they're not long or short, but they're just taking and gaining arbitrage out of the funding rates in the perpetual market. So it's bullish because we're seeing a massive rise in open interest. But a lot of the ETF inflows here, it's not just buyers coming in, right? You have to know that there's hedge funds and everything kind of arbing out. And that is why, actually, over time, it's one of the inevitable consequences of Bitcoin becoming an institutional asset is that volatility is going to get crushed, right? Which means, you're not going to get those huge moves we've seen in other bull markets. We've seen that, right? Volatility is getting crushed. The rate of change of Bitcoin, its annualized rate of growth is obviously coming down over time as it matures. It's inevitable, can't change that, just is what it is, right? So we are going to get lower returns in bull markets over time, but that doesn't matter. It's still the best performing asset. This is just what happens when institutions pour billions into markets. If you're going to get loads of people going long in the futures market, paying 10, 12, 18% in futures perpetual funding, then you're going to get hedge funds selling short the other side, buying long in the spot market, and just arbitraging 12 to 18%. As a hedge fund, essentially, your job is to just get as much money into your fund as possible, run these arbitrage strategies, etc., take your fees out of it. So it's a big market, and everyone's going to try and make their money in other ways, right? If it's arbitrage, the funding rate, if it's just going long, etc. Lots of different hedge funds with lots of different strategies. It's a world market. Digital capital is going to have every type of trader in here. So yeah, volatility is going to get crushed. The returns are going down, but it's still the best performing asset. You can see this here as well, comparing the scale of ETF capital inflows, right? Huge inflows as GBTC essentially sold out most of its Bitcoin here, but you're seeing this start to flow in again, right? So open interest is increasing. This is important because people are now confident to place their bets now that the election result is becoming ever more clear. And so this is the time where we could see more moves as well, right? High demand, as you can see here, retail investor volume, high demand. So we went through this consolidation period. We've had, a basically consolidation sell-off period. That's changing. We're now into risk on again, right? Risk on because people are sure of what the election is going to be doing. That means they can price their bets accordingly. We have high demand here as well, which typically is a bull market and a rising price for BTC. So don't worry too much about the ETF inflows and etc., right? We know that Bitcoin is going up over time. There is a lot of demand to just buy and hold spot Bitcoin over time. That's the thing that's going to move the price over the long term. But we are seeing risk on again. And risk on means Bitcoin could be going into one of those events. Most of the returns from Bitcoin coming like 10 trading days per year. And so you just have to be patient and wait. But we're seeing that bubble up right now. And when you do bubble up, that's when you start to go up into the all-time high. And obviously, that's where you start to get breakouts. We can look at derivatives trading volumes and technical analysis all day long, but it doesn't matter unless the industry is growing. Unless the industry is growing, none of these trades make sense. You can't buy bear markets and you can't buy pullbacks in bull markets unless the industry is growing and you think the industry is going to grow out of it. That's the whole point, right? The trade is when the price is low versus longer term demand. That's when you actually make the money with your trades. You can see here that it is growing. It's in the 95th percentile for most of this stuff. Daily active addresses, monthly active addresses, transactions, etc. One thing here is that fees are actually, not up there. That's actually good. Fees are coming down as the industry scales. That's the only way it scales. You can't have people spending $15 on a transaction. ETH is now way cheaper. Layer 2s are like under a penny to use, right? And so what you're seeing is a proliferation of amount of transactions and amount of usage. There's a bullish case and a bearish case to this, which I want to quickly go through. L1s are not companies, and they're not going to make monopoly style profits like Apple, Google, and Microsoft. They cannot work like that. They're not equity. They are not companies. They can't do that. Google's massive because it took over YouTube, Maps, Android, and puts them all into one. Meta's big because it took over, Instagram, WhatsApp, and all those, put them into one. That Ethereum can't do that. Solana can't do that. It is just digital capital for a financial system. That's it. So it's very, very different. This both has a bullish and a bearish case. As transactions come down, you have more demand, more pull from users to use these systems, which hopefully would just have a net demand for the asset. If you think of these L1 coins like digital money or digital capital, why would you hold it? You want to hold an asset because you want to leverage it. In a financial system, you take assets, which these are not liabilities, they're not currencies, and they're not securities, they're commodities. So you take it and you can have it as an asset that you leverage. You put it into liquidity pools, you put it into leverage positions, you put it into carry trades and stablecoin trades, etc. That is the net demand, I think, that gives these things just that net demand that pushes them higher over time. And obviously, if you're holding yen or euros, etc., you can use these currencies as well with those. These are assets, those currencies the base, these ones hopefully won't. That's the net demand over year after year that I think will drive these prices higher. But they are not companies and they should not be valued on how much they earn in fees, because who pays for email? No one. No one pays for email, right? And so no one's going to pay to send transactions around on these chains apart from very, very tiny amounts that will be supported by probably advertising or some other type of way that you can actually earn yield, like leveraging and putting in DeFi pools, etc. So these are not companies, these are currencies. This is important because as monetary policy changes, crypto prices change as well. So what are we going through? Monetary policy right here. This is the important one, this purple line here. As we had literally to the day, as monetary policy rolled over, this is Fed monetary policy, that was the end of the bull market. Bang. all the way down, literally to the day you had the end of the bear market here as monetary policy started to move up again. Monetary policy is conducive to higher asset prices. It's bullish. You can see the conventional risk premium is starting to come back. So monetary policy drives these assets. Monetary policy is getting looser and driving the asset prices higher. We're in a bull market. It's very, very good news. What we can see also, which is the bearish side of the L1 case, especially smart contract chains, is that it is becoming clear that the asset that people actually want to use on these chains is the US dollar. And that's not good. That is not bullish in my opinion. Because what we need for these assets, the L1 assets, is that net demand where people want to buy them, use them, collateralize them, keep them in their wallet. But what people really want to do is actually just use these stable coins, which is the dollar, which is not bullish for these assets, because that means these assets are just commodities. And no one pays for email, and no one wants to pay to put transactions through on a chain. So there is a kind of dichotomy here. I don't think you can just say one, it's one side or the other. I think on net, it is bullish for these assets because you have net new demand for people that use these systems, use stablecoins on these systems. And that means that liquidity needs to be in these systems and you need a collateral asset to actually place on those. Unfortunately, if dollars keep to maturing on these systems, is the dollar going to be the collateral asset? You've also got wrapped Bitcoin on these systems as well, right? You have CBTC from Coinbase, Kraken are inventing KBTC, which is another wrapped asset. So if you've got Bitcoin that you can use as collateral on these systems, why use ETH? Why use Solana? If they're going to be, if Bitcoin's going to be wrapped on those chains, right? So I always come back to BTC. BTC is the digital capital, digital money trade, and it is the alpha in this industry. And I think it should be the basis of any portfolio. And I know that most people don't have it as the bulk of their portfolio. If you look online as meme coins and everything else, I think this is the under-owned asset in the industry. That is the capital. So that's why I constantly come back to BTC. It is the trade. It is the crypto trade. If you do trade, Bybit deposit bonus, $30,000 down in the description. The crypto investor course will be updated after the election with a bunch of stuff, really important videos, I think, as well, on managing your portfolio, your finances with Bitcoin and crypto. So if you want to view those videos down in the description, the crypto investor course, you can have a look at it. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.